Here are some more things to think about if you are considering a reverse mortgage. Carefully assess why you are interested in these loans and how you plan on using the money. A reverse mortgage is not a good way to get money to invest, spend on luxuries, or other things that are not necessities. Why? Because they cost so much. The upfront fees can exceed 10% of the loan in some cases, and the compounding interest can make your loan balance skyrocket. When you are making determinations about how long you will stay in your home, assess your current and future health as best you can as part of your decision. Reverse mortgages require borrowers to live in their home. They come with clauses that trigger repayment if a home is unoccupied for a stated amount of time. The usual amount of time is 12 months, but it can be as low as 3 months. For example, if you become ill and have to be treated in an assisted living facility for 4 months, that may trigger repayment in some reverse mortgages. Assess your health as best you can and know the specific amount of time your loan states you can be away from the home. If a married couple is living in the home, it is important that both spouses are listed as co-borrowers in the reverse mortgage loan documents. If only one spouse is listed in the loan documents and the borrowing spouse dies, the surviving spouse will be required to sell the home or pay the loan balance under the terms of the reverse mortgage. Reverse mortgage loans are only available to borrowers that are at least 62 years old. Because of this requirement, a couple where only one spouse is older than 62 will not be allowed to list the younger spouse as a co-borrower. In this circumstance, a reverse mortgage broker might suggest that only the older spouse should be listed in the loan documents. This puts the non-borrowing spouse in a dangerous position because he or she will have to move out of the house if the borrowing spouse dies or needs to move out of the home. Also, a single older spouse may be entitled to a larger amount, and a broker may push for this. However, this puts the non-borrowing spouse in jeopardy. As previously discussed, a reverse mortgage becomes due and payable when the borrower sells the home, moves out of the home for a specified amount of time, or dies. Because of this, children and other dependents should be prepared to move when an event occurs that triggers the reverse mortgage to become due. A reverse mortgage may affect your ability to take out other loans and/or the cost of those loans. Lenders assess your income, assets, debt levels, credit reports, and scores when making lending decisions. If you have a reverse mortgage tied to your major asset, your house, lenders may determine you cannot afford another loan, or they may issue a loan at a much higher interest rate, making it more costly. Your reverse mortgage may also make you ineligible for Medicaid and other benefits such as Social Security income or food stamps. Medicaid is a needs-based program, and typically monthly assets for a single person cannot exceed $2,000 or $3,000 for couples. Asset limits vary by state. You should check to see if your reverse mortgage will affect these payments if you rely on them. Medicare, by the way, is an entitlement and not based on income levels, so a reverse mortgage will not affect that. Take some time to think through your options. Consider if you have less costly options. Do you have other financial resources that you could use instead of taking out a loan? If you don't, and if you could easily make the monthly repayments on a home equity loan or a home equity line of credit, these alternatives are much less costly than a reverse mortgage. However, these loans usually require you to make monthly payments, and they come with their own risks, such as losing your house if you are unable to make payments on the loan. Also, your income, savings and other cash, and credit rating may play a larger role in determining whether you qualify for these loans. If you are having trouble paying property taxes or making home repairs, many state and local governments offer very low-cost loans for these expenses. Some state and local governments may also offer assistance with utility bills. If you have high medical expenses or long-term care needs, you may be eligible for Medicaid or other public benefits that can help you cover those costs. Have you seriously looked into the costs and benefits of selling your home and moving into a less expensive one or renting? Selling your home will allow you to utilize most of your equity. In a reverse mortgage, you only get a portion of your equity because you have to cover the fees and interest costs. Of course, if you sell your home, you have to find and pay for a new place to live. You might consider moving into a smaller, more affordable home. If you decide to further explore a reverse mortgage, please be on alert. We want you to know your money and equity are a target to people who may not be honest. The lender may have a financial incentive to maximize his or her profit by steering you into a loan that may not be in your best interest. For example, a lender may steer you into a larger reverse mortgage with exorbitant costs when you could have been eligible for a less expensive one. They may also persuade you to take a lump sum payment, which will cost you more. Some brokers may be misleading or leave out key facts. Realize brokers are paid on a commission, so the more you borrow, the more money they make. Watch out for the bait and switch. Are you getting the low rates that were promised? Does the loan document contain the terms and conditions you were told? Don't rely on spoken promises. Get it in writing and know what you are signing. Also, watch out for those who pressure you to use your reverse mortgage to buy other financial products, like an annuity or long-term care insurance. Resist that pressure. You do not have to buy any products or services to get a reverse mortgage. In fact, in some situations, it is illegal to require you to buy other products to get a reverse mortgage. Be on the lookout for deceptive ads claiming that a reverse mortgage is a government benefit and not a loan. Do not believe all of the advertisements you see or hear about this product.
If you don't understand the cost or features of a reverse mortgage or any other product offered to you, or if there is pressure or urgency to complete the deal, walk away and take your business elsewhere. Consider seeking the advice of a licensed professional, such as an attorney or a fee-based financial planner, or seek help from a family member, friend, or someone else you trust. If you suspect that someone involved in the loan transaction is breaking the law, let your housing counselor, lender, or loan servicer know. Then file a complaint with the Consumer Financial Protection Bureau and the Attorney General's office. The phone number is 1-800-551-4636. You can always go to our website, which is atg.wa.gov.